Welcome to Market Brief After Hours. It is Thursday, and we have a lot of ground to cover today. Wall Street staged quite a comeback, recovering from the Federal Reserve-induced sell-off we saw during the previous session. What exactly drove this turnaround, especially with the tech and semiconductor sectors leading the charge?
It really came down to a massive rally in chipmakers and some very intriguing corporate partnership news. On Wednesday, investors were spooked by a hawkish tone from the Federal Reserve's first meeting under its new chairman, Kevin Warsh. But today, the market shifted its focus back to fundamental growth drivers, particularly artificial intelligence infrastructure. The big catalyst was the announcement that Intel is partnering with Apple to design and produce chips domestically in the United States. That sent Intel shares soaring over 10% and lifted the entire semiconductor space.
It is fascinating how quickly market sentiment can pivot. Let's look at the major U.S. indices to see how this played out. How did the numbers shake out at the closing bell?
The major indices finished solidly in the green. The S&P 500 gained 1.08%, closing at 7,501. The Nasdaq Composite, heavily boosted by those tech gains, climbed 1.91% to finish at 26,518. Meanwhile, the Dow Jones Industrial Average had a more modest gain, rising about 72 points, or 0.14%, to end the day at 51,565.
And this also wraps up a holiday-shortened week for U.S. markets. How does the weekly performance look?
It has been a highly positive stretch. The S&P 500 gained 0.9% for the week, marking its 11th winning week out of the last 12. The Dow advanced 0.7%, and the Nasdaq jumped an impressive 2.4% over the period.
That is incredible resilience. But let's go back to the Federal Reserve for a moment. What exactly happened at Kevin Warsh's first meeting as chairman that caused that initial sell-off on Wednesday?
It was a decidedly hawkish debut. The Fed kept the benchmark interest rate unchanged at 3.5% to 3.75%, which was expected. However, the committee removed key language from its policy statement that had previously indicated a bias toward future rate cuts. On top of that, the Fed's dot plot revealed that 9 out of 18 officials now foresee interest rate increases in 2026. Chairman Warsh also chose to abstain from submitting a rate forecast himself, but during his press conference, he repeatedly emphasized the goal of achieving price stability.
And how did the bond market react to that hawkish shift?
We saw a massive move in Treasury yields. The 2-year Treasury yield, which closely tracks short-term Fed policy, rose again to 4.179%. That follows a massive 16 basis point spike on Wednesday, the largest single-day jump on a Fed meeting day since March 2008. Meanwhile, the 10-year yield dipped slightly to 4.453%, and the 30-year bond yield fell to 4.90%.
Let's look beyond the U.S. borders. How did international markets digest this hawkish Fed stance alongside their own domestic economic data?
It was a mixed bag globally. In Europe, stocks closed broadly lower, snapping a 5-day winning streak. The pan-European Stoxx 600 slipped 0.34%, and the UK's FTSE 100 fell 1.04%. Over in Switzerland, the SMI settled 0.36% lower. On the positive side, Germany's DAX rose 0.37%, France's CAC 40 gained 0.44%, and Italy's FTSE MIB edged up 0.18%.
There were also some key central bank decisions in Europe today, correct?
Yes, both the Bank of England and the Swiss National Bank left their key rates unchanged. The Bank of England voted 7-2 to hold its rate at 3.75%, which is its lowest level since June 2023. This came alongside data showing the UK unemployment rate unexpectedly dropped to 4.9%, while average earnings grew by 4.4%, which was stronger than expected. Meanwhile, the Swiss National Bank kept its policy rate at 0%, in line with expectations, despite rising inflation. We also saw producer price inflation in Portugal accelerate to 5.1% in May, driven by soaring energy costs.
And what about Asia? How did those markets fare?
Asia was highly polarized. On one hand, you had spectacular runs in Japan and South Korea. Japan's Nikkei average soared 1.65% to cross 71,000 for the first time, closing at 71,053. South Korea's KOSPI index jumped 2.25% to breach the 9,000 milestone, closing at 9,063. Both markets were powered by intense AI optimism and semiconductor strength, with Samsung surging 4.6% and SK Hynix advancing 6.5%.
But it wasn't all positive in Asia, was it?
No, Chinese and Australian markets struggled. China's Shanghai Composite fell 0.43% to 4,090, and Hong Kong's Hang Seng tumbled 1.59% on worries about U.S. rate hikes. Australia's S&P/ASX 200 also fell 0.62% to 89.11, snapping a 4-day winning streak. Over in New Zealand, the S&P/NZX 50 slipped 0.22%, while in India, the Sensex and Nifty both managed modest gains of about 0.33% and 0.34%, respectively.
A lot of moving parts across the globe today. We are going to take a very quick break, but when we return, we will dive deep into the major currency movements, commodities, and the individual stocks making the biggest waves today. Stay with us. Welcome back to Market Brief, After Hours. Let's shift our focus to the foreign exchange market. We saw some dramatic moves today, especially with the US dollar showing real strength. Can you walk us through the major currency pairs?
Absolutely. The Euro-USD pair experienced a sharp sell-off, plunging 0.36% to close at 1.1460. This move decisively broke through recent structural support. From a technical perspective, the euro is now trading well below all its major moving averages. To give you some context, the 50-day simple moving average is at 1.1665, the 100-day is at 1.1671, and the 200-day is at 1.1673. These averages are clustered overhead and starting to point downward, suggesting that the bearish momentum is accelerating.
And we saw a similar story with the British pound, didn't we?
Yes, the GBP-USD pair dropped sharply, falling 0.70% to close at 1.3202. Just like the euro, the pound is trading heavily depressed below its key moving averages. The 50-day SMA is at 1.3468, the 100-day is at 1.3454, and the 200-day sits at 1.3416. This breakdown confirms a resumption of the medium-term downtrend that we have been tracking.
On the flip side, the dollar gained significant ground against the Swiss franc and the Japanese yen. What do those charts look like?
The USD-CHF pair surged 0.63% to close at 0.8048, breaking through key resistance. It is trading comfortably above its major moving averages. The 50-day is at 0.7866, the 100-day is at 0.7842, and the 200-day is at 0.7903. This reinforces a very constructive bullish trend. As for USD-JPY, that pair accelerated higher by 0.49% to close at 161.41. It is well above its 50-day SMA of 159.06, its 100 at 158.15, and its 200 at 155.93. The momentum there is incredibly strong.
Let's touch on commodities and crypto. Gold and silver seem to take a pretty heavy hit today.
They certainly did. Gold retreated 0.83% to close at $4,217. It is trading well below its key moving averages, with the 50-day at $4,556 and the 200-day at $4,440. Silver took an even bigger hit, plunging 2.99% to close at $65.81, falling back below its 200-day moving average of $68.12.
Before we wrap up, I want to touch on the crypto space. It was a pretty painful day for digital assets, with Bitcoin dropping below a key psychological level.
Yes, Bitcoin fell 2% to drop below the $63,000 mark, settling around $62,917. Ethereum also slipped 1.7% to $1,704, and we saw declines of around 3% across other major altcoins like Solana, XRP, and BNB. What's notable here is the leverage shakeout. We saw nearly $190 million in global crypto liquidations in just 1 hour, with about $182 million of that coming from long positions. It shows that a lot of bullish traders were caught off guard by the sudden downturn.
And what about oil? We heard some news from Vice President J.D. Vance regarding the Strait of Hormuz.
Yes, Vance reported that over 12 million barrels of oil crossed the Strait of Hormuz overnight, which is a high since the conflict began. Despite this, oil prices were relatively flat. Brent crude gained 30 cents to close at $79.85 a barrel, while WTI fell 19 cents to $76.60. Prices have actually fallen more than 11% since the U.S. and Iran announced a deal on Sunday.
Before we get to individual stock movers, we also had some domestic economic data today on jobless claims in manufacturing. What did those numbers tell us?
Initial jobless claims edged slightly higher to 226,000, which was very close to the consensus estimate of 225,000. On the manufacturing front, the Philadelphia Fed Manufacturing Index jumped to 10.3 in June, up from negative 0.4 in May, showing much stronger factory activity than Wall Street anticipated.
Let's wrap up with the individual corporate movers. Aside from Intel's massive double-digit gain, who else stood out today?
It was a fantastic day for memory and semiconductor stocks. Micron Technology advanced 9%, Western Digital gained nearly 5%, and Sandisk climbed about 11%. The iShares Semiconductor ETF, or SOXX, jumped more than 7% to hit a new record high. On the losing side, Novocure plummeted over 19% after announcing that its Phase 3 trial for glioblastoma patients failed to meet its primary endpoint. And grocery giant Kroger dropped more than 7% after reporting first-quarter earnings of $1.58 per share, which was just a penny below expectations, and offering a weaker-than-expected full-year forecast.
A highly active and pivotal day to end the week. As a reminder for our listeners, the U.S. market is closed tomorrow, Friday, in observance of the Juneteenth holiday. Because of the long weekend, our next episode of Market Brief After Hours will air on Monday.
It is a great opportunity for everyone to take a breather, digest these major policy shifts, and prepare for what is shaping up to be a very interesting summer of trading.
Absolutely. If you found this useful, please follow Market Brief After Hours. Thank you for listening, and we will see you on Monday.